Long-term tax planning is a great opportunity for you to save money in retirement.
We talk about it a lot on this show, but usually we're talking about federal tax rates.
But today's show is all about Iowa, income tax rules, rates, and opportunities for savings. Right now on Retiring Today.
Welcome to Retiring Today. I'm here with Loren Merkle and Sean Honkamp. They are both certified financial fiduciaries and certified financial planners. Sean is also a CPA. Guess what else they are? They're Iowans, just like me. All three of us are Iowans. Guys, I've got a lot of Iowa pride today. You guys got your Iowa pride? You brought it with you?
Yeah, got all kinds of Iowa pride
Yeah,
today.
we have Iowa pride because a lot of times we talk about taxes on the show, but we're talking a lot about federal taxes. Today we're talking about just the state of Iowa. So the three of us are Iowans. We brought our Iowa pride. Let's real quickly say where we were born and what's great about it.
Ypsilanti, Michigan, but I've been here for 40 years.
That's right, yeah.
And, I just like the people. I like the people in Iowa, nice people. They call it Iowa nice for a reason, and I enjoy that the most.
Yeah, small town, Earlville, Iowa, in eastern Iowa. It's in that area of Field of Dreams. That gives Iowa a bunch of recognition growing up on a farm. What I love a lot about Iowa is just, again, the Iowa nice. People pull into your farm driveway. You take them, at their word, and you just shake hands, and you figure out what you guys are ready to talk about.
Yeah, and I was born in Fort Dodge, famous maybe for the Cardiff Giant and the Gypsum, and I live there now, and I raised my family there, so it's a great place. We all love Iowa, and if you're watching, you might love Iowa too. So you might be thinking about retiring in Iowa, you're working in Iowa, so we want to talk about taxes. And Loren, the reason we want to talk about taxes is because taxes are part of every retirement plan that you build for people, lots of them in Iowa, some in other parts of the country as well, because it's an important part.
It's an important part because so many people pay a lot in taxes, and we tend to think that as we make the transition from the working world to the retirement world, there's not a whole lot we can do to mitigate the impact of taxation in our retirement because we're just used to paying taxes all throughout our working career. But in fact, that's not necessarily true. If we implement an effective tax planning strategy, we can save a bundle of taxes over the course of your retirement. And most of the time on this show, we're talking about taxes from a federal tax standpoint, not necessarily a state standpoint. And that's why I'm really excited about this show, because there are a lot of Iowa state tax changes that are coming down the line, whether you're working or whether you're retired and have retirement income. There are changes that could impact you, and that's what we're going to be talking about today.
Yeah, let's just make a real quick kind of comparison between state and federal taxes. People familiar with the fact that they pay both, but maybe what do they need to know as they're thinking about, mostly we're talking about state taxes today.
Yeah, that's what we're going to dive into today because of those changes that are coming down and because the state tends to get just less visibility. We just don't focus on it as much. We're all familiar with the federal taxes. That's where we are paying more. The rates that you're paying on your federal tax rates on the income you earn is certainly higher than what we do pay in the state of Iowa. And you think just the nature of our tax returns even. What's the top page? It's your federal 1040. That's where our eyes go to first. We look at the federal standpoint. Your state tax return is usually buried way back there in pages 20, 30, 40, whatever. So we know the state of Iowa taxes and the rates and the effective rates that we pay, and the whole picture around the state of Iowa taxes, they just don't get as much attention. So today, we're definitely going to be focusing on the state of Iowa tax rates.
And a lot of times when people look at their tax return, they're focused on their tax refund, not necessarily the amount that they pay in taxes to the state of Iowa or to the federal government. And one of the comments that we hear quite a bit is, well, I had to pay an extra, $2,000 to the feds, but I got $1,500 back from the state, so I'm not worried about the state taxes. Well, that's just the refund or what you have to pay when you file taxes. But if you actually look at your tax returns, you might have ended up paying $3,000 to the state of Iowa over the course of the year, or $10,000 to the federal. So we're focusing on how do we decrease the overall impact of your retirement tax bill from a state standpoint and not necessarily just from a federal standpoint.
And also, Loren, the reality is that so many households just focus on a monthly lifestyle. You think about our mortgage, we figure out what the monthly payment is, what car payments, what's it going to cost me every month. A lot of people just focus on their monthly paychecks as well, or their net amount. It's interesting too, we meet families and sometimes they don't even know what their gross income is. They can answer, I get this per month or this every 2 weeks. So a lot of people don't pay attention to what that total tax bill is, And that's what we're going to try to, that's what we focus on. We try to help our families understand what your tax bill really looks like.
Yeah, and that's okay that that's what they focus on, because part of our job is to focus on the entire picture while you go out and have fun and enjoy your lifestyle. And that's baked right into our overall retirement plan. We call it your Retirement Merkle plan, which focuses first on the lifestyle. The very first conversations that we have, we're talking to our families about what do they want to do in retirement? What does retirement look like to you? Do you want to travel? Do you want to chase the grandkids around? Do you want to winter in a warmer climate?
Well, who'd want to get out of Iowa? We're talking about our Iowa pride here, Loren.
Nobody, right? Except for during the months of December,
January,
definitely January, February.
Yeah.
And before, it was tempting for many people to reside in a different state for at least 6 months out of the year, because then you could establish primary residence, and maybe you'd establish that primary residence in Florida. Florida does not have a state tax, whereas Iowa used to, or still does this year, have a relatively higher state tax. And then you have the winter climate that we all have to deal with, which, by the way, I've grown to appreciate.
Sure.
When 20 years ago, I was like, winter's not for me, the changing the seasons. I love summer.
Yeah.
Which actually now I do love the changing of the seasons.
Yeah, that is a reason to love Iowa. And you mentioned the Your Merkle plan. It's got the components. They're up on the screen right now. So lifestyle, income, tax, investment, healthcare, and legacy. And we are focusing on state income taxes today, but federal income tax planning is a big part of retirement planning. It's a big part of what the retirement planners here do. So you might be wondering, well, can I even control federal income taxes? You'll be surprised to learn that you do have a lot of control when it comes to long-term tax planning. Go to YouTube. Search Merkle Retirement Planning. Right there, we've got a tab that says tax planning. You can learn more about some of those federal tax planning strategies. Okay, let's go back to state income taxes, because if you look at this, guys, too, it is all over the place as far as what states do with how they tax incomes. I mean, there is a lot of states that are not taxing income at all.
Yeah, currently there are 9 states that do not have income taxes at all. Right now, Iowa is one of the highest states that do have an income tax. But you think about the 9 states that don't, there's a few of those that get all the publicity because of the climate. Like you mentioned, Loren, you've got Florida, you've got Texas, you've got Nevada, there's a few others, South Dakota, Alaska, again, a couple others in there. So some of those are already at that point where they do not have income tax at all. Iowa, with the high income tax rate that they have right now, we're going to be making some changes. We're trying to get more competitive with what level of taxes Iowa residents have to pay.
Yeah, and it's because of the Iowa Nice and all the great things about Iowa why people stay here. But once those ties lessen, and a lot of times we'll see those ties start to lessen once people retire. So once you retire, maybe your kids now live in different states, maybe they've chased some warm climates, or you just have less that's keeping you here in Iowa. It's tempting then to go to a warmer climate and then a friendlier tax state that with friendlier taxes. Well, what the state of Iowa is trying to do is trying to lessen that appeal to leave, and I think they have successfully been able to do that. I've talked with a number of families already that said they were thinking about leaving the state or establishing primary residence in a different state because of taxes, but now they're second guessing it. So I think it's going to have the impact that we're really trying to have and keep the good people of Iowa here even once they retire.
Yeah, so he's talking about the changes that are to come. We want to get to that in the second segment, but let's show people, Loren, what's happening right now in Iowa from an income tax standpoint.
Yeah, the current tax code looks a lot like this. This is what we call a progressive tax code, and what we're moving to is what we call flat tax. So the progressive means that pieces of your income are going to be taxed at a different rate depending upon the level. So as your income increases, the rate of tax you're going to pay on that income will also increase. So in the state of Iowa, right now, we do have a standard deduction, which means if you file your taxes single or file married separately, then you get a $2,210 standard deduction. So that's $2,210 you do not pay any tax on at all. If you're married, then it's $5,540, so $5,540 of income. Your first taxable income is not subject to tax. After that, then your income goes from 0 to 1743, is taxed at 0.33%, and you can see how as the income increases, the rate of tax that you pay on that band of income increases as well. So right now we have 9 different tiers going all the way from 0.33% to 8.53%. So any dollar that you make over $78,436 will be taxed at 8.53%. So for a lot of our planning with our families, especially if we're engaged in Roth conversions, if you can see the income level doesn't take that much, $78,000. So if you're making $80,000 and then you want to do a $40,000 Roth conversion on top of that, then that whole $40,000 is going to be taxed at 8.53%. And from a state tax level standpoint, that can get expensive.
That 8.53 is the 6th highest in the United States. Okay, guys, I brought some Iowa trivia along. Here it is. It's coming up on your screen. Don't answer yet, because we'll answer after the commercial break. But here's the question. Which late night host was born in Iowa? Jay Leno, David Letterman, Jimmy Fallon, or Johnny Carson? We'll talk about the answer to that trivia question and the state income tax law changes that are coming in Iowa when Retiring Today continues.
Biking, boating, relaxation? What's your retirement vision? Learn how to take the money you've worked so hard to save and turn it into the retirement of your dreams during our Journey to Retirement workshop. Like getting ready for a trip, getting to and through retirement takes a roadmap. This workshop is the first step to planning your 20 or 30-year vacation. Go to retirewithmerkle.com to register for our Journey to Retirement workshop this week.
Anytime I have even the smallest question about my accounts or what effect the latest tax law might have on my situation, the Merkle Retirement Planning Team is always there and quick to help. I'm so glad they treat you like family. I'm so happy to have such an excellent team working for my future and ensuring I do the best to achieve my financial goals.
Merkle Retirement Planning. Your retirement starts here.
Welcome back to Retiring Today. Let's take another look at our Iowa trivia question. Which late night host was born in Iowa? Jay Leno, David Letterman, Jimmy Fallon, or Johnny Carson? Iowans?
John Wayne?
Good. John Wayne was born in Iowa.
Letterman?
Let's say
The
Carson.
question mark?
It's Carson. Johnny Carson was born in Corning in 1925.
All right.
And not too terribly long ago, his child, the home he was actually born in, was turned into a museum there in Corning. You guys got to get to Corning.
Guess so.
Okay, so today we are talking about Iowa state income taxes. We set it up by showing the brackets now, currently 9 brackets, highest one at about 8.5. But Governor Reynolds recently signed some big reform. Loren, the reform was the biggest change to the Iowa tax law in quite some time.
It is one of the biggest pieces of legislation according to that has to do with the Iowa tax code in decades. And really there's 2 main segments of this tax law change. One focuses on retirees or people who are 55 and older, and the other still pertains to those who are earning a wage. And so from a retiree standpoint, retirement income, so your pension income, distributions from your 401k plans or IRAs, Roth conversions, all of that type of income, if you're 55 or older, will be tax-free starting January 1st of 2023.
Okay, so this doesn't happen right away, all of it. Some of it does. We'll get to the retirement income part first. But Sean, you're going to show us kind of how this progressively, we work to this flat tax rate that Governor Reynolds signed into law.
Yeah, these changes are really going to simplify the picture. Loren, you talked earlier about the 9 brackets that we have today, the number of different tax rates that are in effect with those 9 brackets. And over the next couple years, we're going to see a lot of simplicity, which is always great to see. We know taxes are not easy to do. That's why we pay professionals, CPAs and tax preparers to do that. So we're going to be looking forward to this. This is really going to be a good thing, for the state of Iowa, a great thing for retirees and all of us that are earning income in Iowa. So there's going to be a phased approach. So starting with 2023 through the year 2026, and when we get to that point, that's when all these changes will be implemented. So currently we talked about 9 brackets, that top rate of 8.53. Starting next year, we're going to see a lot of simplicity already. We're going to be going down to 4 tax brackets. That top tax rate is going to be coming down to an even 6%. 1 year later, 2024, down to 3 tax brackets with that top rate being 5.7%. We keep going through that phased approach. 2025, we're going to be down to 2 tax brackets with that top rate of 4.82. And then we hit that magical year of 2026 when these changes will be fully enacted. We're going to have a flat tax rate, obviously only one tax rate, and that rate is going to be at that 3.9%. So really something we're all really looking forward to. Who doesn't want to pay less in taxes? Get to keep more of your hard-earned income in your bank account, and you get to make those spending decisions on those dollars.
Well, I have to say though, this is politics, right? Taxes and politics are coinciding. So not everybody loves this. Of course, some opposition to this, some people wondering how will we fund some of the things that states are obligated to pay for. But again, from an income earner's tax point, you kind of like the idea of paying less, but we should note that not everyone loved the legislation that Governor Reynolds passed.
Yeah, that's exactly right, because it's not going to enhance everybody's income in the same way. There's going to be some who it's a very marginal difference. There's going to be some it's a bigger difference. Whenever you change a progressive tax system, that's the impact that it's going to have. It's going to have a different positive impact on everybody. But the vast majority of Iowans will at least save some money due to the tax change. And Sean, as you alluded to, the simplicity is something that is probably appealing to many people as well. I mean, we're going from 9 tax brackets to 4, 3, 2, and then eventually 1 across the board tax rate for earned income of 3.9%. So even if it's not going to save you a bundle in Iowa state income tax, the simplicity is kind of nice.
Okay, so what you guys do every day though is sit down with individuals and families and talk about retirement planning, whether they're still working or maybe in retirement. They're looking at all of the pieces of the puzzle. So there's a piece of this that's definitely, I know you've had a lot of conversations about, and it's the retirement income piece you kind of alluded to, but what exactly happens with retirement income?
With the retirement income, it's with the, and by the way, you can be working and still have retirement income and have that retirement income tax free. Basically what it means is if you're age 55 or older, and you take distributions from IRAs, 401k plans, pension income, then that income will not be taxed at the state level. So even if you're 60 years old and you work part-time or full-time, have an earned wage, but you are receiving a pension, or you are taking a distribution, or you're doing a Roth conversion to take advantage of some of the lower federal tax rates, all of that income at the state level will be tax-free.
And that's a great point to clarify, Lauren, just because with some of the conversations we're already having with the families that we work with, new individuals that we're meeting, it's easy to kind of confuse that income tax rate with retirement income and what that looks like. Because as you mentioned, effective next year, 2023, that's when the retirement income tax-free. Whereas we just talked about that gradual change, that phase in to the income tax rate. So it's just important to know that the retirement income versus the earned income sources and what that means and looks like within your picture.
And really at this point in time, that probably is where most of the confusion is. In the conversations that we're having, I mean, we're engaged in a lot of tax planning, and one of the most effective tax planning strategies for people is to do a Roth conversion. So as we're talking about the changes of the IRS, people are saying, well, wait a minute, isn't that phased in? And when does that get phased into 2026? And we're like, no, actually this retirement income tax law change starts next year. And so we can wait and do a Roth conversion, not do it this year if it makes sense, because that way you won't pay the Iowa state tax, and we can do it next year and not pay any state tax on that Roth conversion. That's all a part of the equation, but we need to keep those two parts of the laws separate so we have a good working understanding of how they're going to apply to you to make sure we're implementing the right strategies at the right time.
So you probably have questions about these new state income tax law changes. Here's a great opportunity to speak directly with a retirement planner. Right now, you can schedule a 15-minute complimentary retirement checkup call. Go to merkleretire.com right now. There's a calendar. You can click right there and schedule your retirement checkup call today. So we want to talk about a little bit more in the next segment about how all of this impacts retirement plans. What are you doing maybe differently as you sit down with families? But that's more Iowa trivia. You guys game?
We're game.
Okay, here it is. Yeah, I've got 2. I can't decide. Okay, this one. What force formed Spirit Lake? A meteor, glaciers, bulldozers, or erosions? We'll answer that question and continue our conversation about the Iowa state income tax law changes when Retiring Today continues.
The Merkle Retirement Planning Team provides personable and professional expertise unrivaled in this area. They include us in every step of the planning process. The peace of mind provided to us by the Merkle team allows us to fully enjoy this special time of our lives. Instead of feeling snakebit, we feel confident that with the Merkle Retirement Planning Team at our sides, we can navigate any challenge that comes our way.
Merkle Retirement Planning. Your retirement starts here.
Biking, boating, relaxation? What's your retirement vision? Learn how to take the money you've worked so hard to save and turn it into the retirement of your dreams during our Journey to Retirement workshop. Like getting ready for a trip, getting to and through retirement takes a roadmap. This workshop is the first step to planning your 20 or 30-year vacation. Go to retirewithmerkle.com to register for our Journey to Retirement workshop this week.
Welcome back to Retiring Today. Here's another look at our Iowa trivia question. What force formed Spirit Lake? Was it a meteor, glaciers, bulldozers, or erosion? What do you say, Iowans?
You want to go first?
I mean, you're asking what force, and it has spirit in there, so I'm leaning towards the meteor.
The meteor?
Well,
Loren?
I'm tossed between man-made, so bulldozer, or glacier. I'm going to go glacier.
Glacier it is! Spirit Lake is Iowa's largest natural lake. Of course, Spirit Lake in the great part of the state, actually, northwest Iowa. That's the best part of the state. So we're talking about the state of Iowa today because we're talking about state income taxes and what to do with the new rules that were put into place in 2022. So you guys are sitting down with people, and I know you're getting a lot of questions about this. You wanted to mention a few more of the things that you're clearing up, some of the filing things that you're clearing up for people.
Legislative changes are a part of our lives. They're going to be a part of the retirement journeys of the families that we're working with. So we are going to see some changes. One thing that's kind of unique to the state of Iowa, obviously from a federal standpoint, we're always almost married filing jointly, but within the state of Iowa, most couples file married filing separate within that same return. And the reason being is we think back to those 9 brackets that were in place today. Iowa has it set up so that each individual spouse can fill up those progressive tax rates, and your tax liability ends up being lower. So that's kind of unique to the state of Iowa. Again, a high percentage of couples. So that might be something worth checking, making sure that your tax return, if it makes sense, that you're married filing separate, you might have a lower tax bill. And then as we start implementing these changes over the next few years, that's really going to go away. We get to that flat tax of 3.9 in 2026. We do expect that to change, where now our state of Iowa tax returns more likely will be married filing jointly.
Yeah, you're right. Most CPAs are probably doing it that way. But if you file your taxes yourself and you're married, you may not have thought about filing taxes separately in the state of Iowa, because most people who are married file them jointly with the federal taxes. So if you file your taxes yourself, or even if you use a CPA, probably double check and play it out both ways and see which way is best for you.
And these tax law changes also have some good information, or some changes at least for farmers.
Yeah, this tax law does have a direct impact on farmers as well, from a standpoint that if you're 55 or older and you used to actively farm your farm for 10 years, then you have a choice. You can take cash rent tax-free, or you can choose to have your capital gains if you sell the land tax-free when you sell the land as well. So there's a choice involved, which is kind of nice. More flexibility, I think, is a good thing if you understand how to use that flexibility within your overall plan to help mitigate the impact of taxes. So you have the choice. If you're 55 and older and you used to own your farmland and actively farm.
Okay, let's talk about what this does to retirement planning. So we know that 2023, the retirement income tax goes away, and then by 2026, a flat tax. Are you guys making changes to retirement plans when you sit down with people based on this legislation?
Yeah, there are some things that we're trying to think about right now. We're almost halfway through the current year, so a lot of the changes, we've tried to be very proactive with the analysis that we do, with the planning. We're trying to identify these different strategies and options that can be a fit for a plan in a certain year. So there are a few things. Loren, you mentioned earlier, Roth conversions. We have a lot of families that we've been doing Roth conversions for a number of years. This might be a year where we choose to stay on the sidelines. We know that if you do convert today, you're going to be paying those state of Iowa income tax rates, whereas if we wait till January, so 1/1 of 2023, that same conversion will be state of Iowa tax-free. So within the plan, we've got to look at that opportunity and use that new information to help us make that best decision.
And one of the conversations that we have, whether it's sitting down face-to-face with people or people call us, the families that we work with, they call us and they say, hey, I want to buy a second home. And should I take a mortgage? Should I take a distribution from my account? Do I want to purchase a car? Should I finance it or take a distribution? If you're choosing to take a distribution and you have some flexibility on the timing of doing so, you might want to postpone that distribution, not take it this year, because this year you would most likely pay taxes on that IRA or 401k plan distribution, whereas next year, if you're 55 or older, you wouldn't have to pay taxes on that distribution. So we're looking at all of these different things that could arise and saying, should we do it this year or can we wait? Do we have that flexibility, and should we do it next year?
And Loren, you're talking about the voluntary decisions, whether to take a lump sum for some large purpose. What about the non-voluntary ones, the RMDs? If you're turning age 72 this year, you're going to be facing your first RMD. What's something that's nice to think about or important to think about is you have the option to defer that initial RMD. And if you're going to take that RMD this year and pay state of Iowa income tax, it very well may make sense to defer that, not take that first RMD until next year and save on those state of Iowa taxes.
Yeah, and part of the planning component that goes in with that decision is if you do defer it this year, then next year you have to take 2 RMDs, one for the one you should have taken this year and one for next year. So that could have an impact on your federal tax bracket, or it may not. For many of the families that we've decided to defer, it doesn't. And that is one of the reasons why they chose to do that. All of these different moving components are something that we need to take a look at, analyze, and then once you see the outcome of those decisions, your decision will be much easier.
And you talk about all the moving components, guys, and we've only talked really a lot about taxes today, but there are a lot of pieces of a retirement puzzle. There's 6 that we walk families through and 6 components that we walk families through. So people might be wondering, what about those other components? Well, there's a great opportunity, Sean, for people to learn about all of the pieces of the retirement puzzle.
Yeah, we do a Journey to Retirement workshop. We do that at different times. We're trying to get all that information out there. All right? One of our goals within, we talk about it internally within the firm, we're trying to help as many families as possible. We're trying to get that education out there. So if you're within 10 years of retirement or beyond, attending a Journey to Retirement workshop, we're going to talk about all those 6 components of the planning process. We have a lot of fun. We try to use some generic examples, but we really want to help get you thinking about the things that you need to start thinking about as you continue through your working career and get closer and closer to retirement.
And one of the things I really like about the workshop is we use specific strategies in our examples. So probably throughout the course of that workshop, you'll take 1 or 2 different specific strategies that you can implement almost right away to help what you're trying to do from a retirement planning standpoint.
There's information on your screen right now about how to sign up for the Journey to Retirement workshop. We'll continue talking about all of the aspects of retirement, how to live out your retirement vision on this show. It's Retiring Today, and we thank you for watching.
Biking, boating, relaxation? What's your retirement vision? Learn how to take the money you've worked so hard to save and turn it into the retirement of your dreams during our Journey to Retirement workshop. Like getting ready for a trip, getting to and through retirement takes a roadmap. This workshop is the first step to planning your 20 or 30-year vacation. Go to retirewithmerkle.com to register for our Journey to Retirement workshop this week.